What's up, Mortgage Coach community? I am doing a mortgage strategy interview with Jordan Heatherly. What's up, Jordan?
How you doing, Dave?
I'm doing good, man. I am super pumped for this interview. You were recommended by Kevin Watson, I guess the branch manager of your office. Is that right?
Yeah, correct. Kevin's my boss.
Yeah. So the way he introduced you, I was asking him, hey, I'm looking for some new up-and-comers that are like killing it, and either they're in the chairman's club or they're future chairman's club. And he just like raved about you. He said, you're killing it. If you don't mind telling everybody a little bit about your mortgage practice, and then let's talk about, some ways in which you're getting so successful.
Yeah, for sure. So been in the mortgage business. This will be my third full year of originating. Started off as just a loan assistant for a couple loan officers at Churchill, and then took the leap up to be a loan officer full time. And it's been great. I mean, Churchill is an amazing place to learn and to grow. And, obviously huge fans of Mortgage Coach. I'll even speak to that. Mortgage Coach has been a huge part of me, even learning about mortgages and the different programs and the benefits of those over time, which we'll talk about here in a little bit. So that was huge in my development. And so because of how much I learned from it, it's definitely something that I've kind of, parlayed over into ways that I can teach others. But started off, for those who don't know much about Churchill, we're kind of a lead-based mortgage company, but in the process over this last year, so mostly at this point, a lead-based loan officer, but really moving towards the referral-based. And so for all the people that I've spoken to, Mortgage Coach has been a huge part of, what I've been using and informing borrowers and trying to grow my business through just an environment of trust and education, and really focusing on teaching people about the mortgage process as well.
Love that. Love that. And so right now, it sounds like some of your business is consumer direct, where they're coming in online, from online calls, and some of your business is specific realtors. What are you doing to get business from realtors? Just so we kind of have an idea of how you've transitioned from consumer direct to real estate.
Yeah, for sure. So a big part of what I'm doing, networking is always a big part of that. So just I'm in a single seat networking group. I'm on the board for our Young Professionals Network for our Greater Nashville Association of Realtors, which has been huge. But really just trying to take every transaction and making that an opportunity to create a relationship with both the listing agent and the buyer's agent. So making sure communication is really good, making sure they know exactly where we are in the process, and just trying to build trust with realtors and have people know who I am. I'm relatively new to Nashville, so one of my main focuses moving to Nashville is just having people know my name, me having a good reputation, and that's kind of how I've tried to build it.
And how much business are you doing? Like how many families, how much production are you doing?
Yeah, so year to date, I'm at about 17 million, and I think I'm 76 units year to date.
Boom. That is awesome. How many families served last month?
Last month was 10 families.
Oh, right on. So congratulations. I mean, being in the business for going on your third year, you're trending to help 100 families a year. You closed 10 loans last month. I mean, dude, that is fantastic. You are definitely on the heels of the Chairman's Club. If you play it right, I think that will happen in 2020. So let's talk about why you use Mortgage Coach, how you use Mortgage Coach, and even speak to some of the content that you've used to, learn the mortgage business.
Yeah, for sure. So I think, like I said, one of my big approaches to any client that I work with is making sure that I'm teaching them. And like I said, it was a huge part of my learning and figuring out what programs make more sense over time, whether it be a short time or a longer period of time. And so I really wanted to translate over that to my borrowers. So really just showing them different programs, trying to establish myself as an expert. That's a huge part of what I try to do. And I think I'm showing people things and options that other loan officers just aren't showing, whether it be them not wanting to put in the time or the effort to explain things. But pretty much everybody that I speak to gets a TCA. And I know a lot of people have really enjoyed even just the visual aspect of being able to see something side by side, as opposed to just talking about it or maybe throwing out 3 or 4 different itemizations. I really can just hone in on one report and just go through that with them live in an ideal situation, and talk them through any concerns they might have or questions they might have while looking at that.
Well, let's make sure when we do pull up the total cost analysis, we speak to how you're doing the live experience, because I think that's powerful. Now you mentioned that Mortgage Coach helped you learn the business, because here's the deal. You've only been doing it 3 years. I know loan officers that have been doing the business for 20 years, but because they've always been like the fee worksheet loan officer, I think just a couple of years of using Mortgage Coach or even a couple months of using Mortgage Coach, it accelerates learning how to present strategies. Could you just talk to how Mortgage Coach has helped you learn faster?
Oh yeah, for sure. I mean, every single scenario is a little bit different, right? So everybody that you talk to, it's an opportunity for you to, I kind of play around with Mortgage Coach myself. You know, I might think, hey, this might be a good option for them. Let me throw that in there and see if that would make sense over the long run. Because you're able to cater that to, like I said, short term or long term, it really allows you to have better conversations with and ask better questions of the people that you're working with. Because somebody who's going to be in the house for 5 years and know that they're going to move up will get much different advice from somebody who will be in the house for 20 or 30 years. So even seeing those numbers on the TCA will allow me to say, hey, this is important when looking at these numbers. So I need to make sure that I know from the borrower what their plans are so that I can tailor this to the best thing, best situation for them financially.
Well, I love it. Well, Jordan, before the interview, I looked at how many TCAs you've done. You've done over 600. You used video. You used the live feature a lot. I mean, you are a Mortgage Coach black belt. Like, we are building out this, like, what's a white belt? What's an orange belt? You are a black belt. Not only are you delivering rates and fees, you're showing the cost over time. I do recommend from our prep call that you do more prepaid strategies, because you know how to do it, but doing that more often will help your families make better decisions. It will also help you be more successful. So let's do this. Well, one more thing before we actually show the TCA. Before the call, you mentioned that you had watched my interview with Donald Miller, the author of StoryBrand. What were your takeaways from that? What did you get from that interview?
The biggest thing that I took away is just this statement. It's something that I experienced at Sales Mastery when I was there a couple of weeks ago, is create clarity. I mean, that's a huge part of my business. I think when it was spoken and when Donald talked about it, I realized I was doing this without even realizing I was trying to do it. But just making sure that people understand fully the process. There's kind of two parts to this. I think there's understanding the mortgage process itself so they know what to expect. But I think even before you get there, it's creating clarity within the mortgage options and figuring out, like I said, over time, what the best option will be for them. And I think it allows you to really show people and be the guide. You talk about being the guide and not the hero. So it allows you to really be the guide and say, here are your options, and letting them make the decision. Now, if they want my input, hopefully I'm not showing them options that wouldn't be good for them financially, but I'll give them my input, but really just giving them the information and allowing them to make the right decision for them financially, because at the end of the day, it's their decision, it's their finances. So I think creating clarity within this transaction is so important, because it's both analytical and an emotional transaction. And I think Mortgage Coach does such a good job of really laying the information out in a way that they can understand it and feel more comfortable moving forward in the process.
How did you like some of his scripting, and how to really position loan officers that are fee worksheet loan officers as kind of the villain? Like, hey, I'm showing you the cost over time. I'm showing you options. Do you say anything to kind of position that? What were your thoughts on what he said there, and how do you position that?
No, absolutely. I mean, I think specifically something that I run into a lot is, especially with first-time home buyers, which I tend to work with a little bit more, is the decision between a conventional loan and an FHA loan. And obviously there's pros and cons to each, but I think over the long run, depending on the situation, it tends to be that the conventional loans shine a little bit more so. And so I think when people are talking about other loan officers who have pitched them different ideas, I'll even say, hey, do you know what the long-term benefit is of not paying mortgage insurance over the life of the loan, as opposed to it dropping off after you reach 22 or 20% equity? And a lot of people don't know that difference. So I'm honestly a little bit shocked that people don't have more information. And so I think I position myself as somebody who cares about their long-term finances and their long-term financial health. And that separates you from the other competition who might just be sending an itemization sheet because they don't know the long-term ramifications.
So guys, everybody watching, that was a little script alert. Great question to ask. Write that down. If you're watching this on YouTube, stop it, replay it. It's a question that every Mortgage Coach black belt should start asking, because you're uniquely positioned to actually have an answer to that, and your competition isn't. Fee worksheet loan officer doesn't know the answer. That would be like a major homework assignment if a customer ever asked them, well, what's the long term? What's that going to cost over 5 years, 10 years? So Jordan, let's pull up a total cost analysis. And every time there's a total cost analysis, there's a family story, and then there's specific mortgage strategies. So what's the story here? What's the sales situation that you're in here? And tell us a little bit about the family.
Yeah, so this is a family who's looking to purchase a home. They're moving up from their first home to a second home, and they're really trying to contemplate what they should do as far as down payment is concerned. They're a little bit payment conscious right now, so wanting to make sure they stay under a certain mark. And from a qualification standpoint, this is, I'm sorry, go ahead.
What was that mark? What was the payment mark that they wanted to stay?
Yeah, so 3,200 was the mark that they would like to stay under. And so that's what they were concerned with. And initially they were hoping to just put down 10% on a jumbo loan, but as you'll see here in a second, as far as the payment is concerned, is not going to be the best option for them right now. But this is a self-employed borrower, and there were some qualification potential issues that we would run into for jumbo financing. And so I wanted to show them a couple different options and what would be best for them to keep their payment under where they would need to be, and then also their best option long-term.
Okay. By the way, scroll to the top. I want to just see how you've done your branding, company and personal branding. So you got a good picture of yourself, personal brand. You've got your company brand. Nice job. Okay. By the way, everybody in the mortgage coach community, make sure that you're being intentional about having that set up and having it look good, because you're basically turning your quote into marketing. Make sure it's good marketing. All right, walk us through the mortgage strategies and what the family. Oh, boom!
Let me point this out too, Dave. I wanted to make sure you saw this too.
How do you use that? Do you call that out during the conversation?
No, to be honest with you, I don't call that out. It's something that I just kind of leave in there. It is something that I, do talk about sometimes, but I don't try to be too forward with this. But I think it's a great touch. This was added, I don't know how many months ago this was added onto there, at least that we saw it on our end. But I think this has been a huge thing for us just to have the ability for them to just have one click away for those reviews. So.
Yeah. So my notes on this is, so for anyone that's looking at this, we have a new social survey integration. So your most recent top survey will show up automatically in the mortgage coach report. And I have interviewed loan officers. Some are calling it out, some aren't. I would love to know, anyone on the community, if you do have some scripting and some ways that you talk about this, let me know in comments down below. And then, but here's the deal, guys. Social survey reviews are great. It's great to share them on social media, but this is an active selling environment. This is when you're delivering the options. It's the most important place to have it. So go ahead, walk us through the story and strategy here.
Yeah. So like I said, they're also a little bit conscious of down payment at this point. That's another thing that they were really looking at. Like I said, they were ideally like to be in the 10 to 12% range. And so really what I wanted to show them was, first of all, the difference between putting down 10% and 20% on jumbo financing and the difference in the interest rate that it can make. But also
that's program 1 and 2.
Yep, programs 1 and 2.
Okay.
1 and 2. And then I also wanted to show them a few other options for them to have a high conforming limit first mortgage, plus a home equity line that would get them up to that 10% down payment, as well as just a conforming loan limit plus a home equity line that would get them up to that 10% down payment and what that would look like. Obviously avoiding mortgage insurance, which is great, and then having that home equity line down the road if they pay that off. If they needed to do some upgrades to the house or something like that, that's available to them. But you can see here that with these, high conforming and conforming plus the home equity lines was staying underneath their, payment limit that they were trying to be at, but also frees up some space, which I know we talked about this a little bit, Dave, to maybe invest some extra money into the first mortgage and get some of that money back to save some money, over the long run on that first mortgage.
So just make sure everybody connected the dots on that. What you could do here, and it's a great move, where let's just say they said, hey, I'll pay up to $3,200 and the actual payment was $29. You could have said, hey, what if we put $200 and you prepaid your mortgage? Hey, let's scroll down a little bit because I want to address some of the things that Donald Miller said. So let's go down to the 5-year mark and then click on more information right there under 5 years. So guys, this is where Donald Miller said, by literally showcasing this, you're making every other loan officer they talk to, every fee sheet loan officer they talk to, look like they're not being transparent, like they're hiding something. They're showing the transaction costs, but they're not showing the cost over time. So that's even a great question that you ask people, like, do you know, like if they tell you they're shopping, well, do you know your closing costs? Oh yeah, they're blank, blank, blank. Oh, well, how much is it over the 5 years that you told me you were gonna live in the home until you moved up? Oh, they didn't tell you that? Well, let me show you that. So just think of some scripting, and how do you showcase this with clients? Like, what is your, when do you shine a light on this and when do you not shine a light on this?
Yeah. So, I mean, one of the first questions that I ask them is, do you have plans to leave this home, or do you know how long you'll be living in this home? And for a lot of people, they're not sure. They might say, maybe 5 or 10 years. But that allows me to cater this, information. And so I think what I tell them at that point, if they do it, especially if they have a specific number in mind, I tell them, hey, well, my advice will be much different to you if you're going to be in this house for 10 years as opposed to 30 years. Now, if they're not exactly sure when that'll be, if they're saying, oh, we think we'll be in this house forever, but you never know, then I'm not going to harp on that as much. I'll mostly focus on the long-term benefit of the loan product. But in this instance specifically, I know this couple said that they'd probably be in this house for 10 years because that's when their kids were going to graduate and move off to college, and they thought about downsizing. And so that's why I really was trying to cater into kind of that time frame and see what that would look like over this time period.
Okay, so close this out and then go down to because you have two time frames. You have the midterm and then you have 15. Okay, so and here's the deal. You could have made this 5 and 10. So
absolutely.
That's a thought. Like, hey, here's 5 years and here's 10 years. So you could get a shot between the two options. And then remember, everybody, if you're a black belt, you could have said, and go ahead and go to Edge. I want to show people how easy it is to add the 200 to program 4. So why don't you go ahead and just add a prepayment. Guys, you go to the analyze engine, or excuse me, the advice engine, you click on analyze, you go to the reinvestment strategy, and then right there, Jordan, add $200. So boom, a matter of seconds and a few mouse clicks, and now you can really look at the difference between that. You'll see that it does raise the payment to $2,100. You can see that he added an extra $200, but it will help the home get paid off faster. So just want to make sure everyone is familiar with that. Also, you mentioned earlier that you do the live Mortgage Coach Live. Could you just speak to that real quick?
Yeah, it's funny. I actually started off doing live, and then somewhere along the way just kind of lost that, wasn't doing it. I was just sending it over to people and then following up to ask questions. But really realized my conversion percentage went way down. And so me and Kevin, my branch manager, were actually talking about it and really started to implement the live TCA backend and saw a huge increase in our conversion percentage because you're able to, one, explain the information and establish yourself as the expert. But as any concerns come up or any questions come up, you can speak to those. And then even if they decide and they change their mind about something, what happened in this case, you referenced this earlier, like I said, they were planning on leaving in 10 years, and I had this at 10 years, but I did this TCA with them. And they said, well, we might stay in it and try to pay it off in 15 and then move and keep this as an investment property. And so I was able to, while we were on there with them, change the time frame for the long term from 10 to 15 years. And they were able to see the change there and which program would be better.
Love it. Love it. So stop sharing the screen real quick. Let's wrap this up. So Mortgage Coach community, I hope you're getting value from this conversation. You're getting ideas. You're getting another mortgage strategy, how to show options to a family that, is looking at, different down payment options with a jumbo. We did a conventional with a HELOC, and you also saw a way to, show a prepay strategy. So I want to close it out with a script because I always find that I learn something and our community learns something. What does it sound like when you deliver the total cost analysis to the family? How do you describe that? Like, why would they click on it? Just give us your language and the words you use as you say, hey, I'm going to ask you some questions and I'm going to email you blank. Or, hey, I just sent you what? What does that sound like? How do you describe it?
Yeah, so basically I ask all the information about what they're trying to do, and then I say, I'm going to send you a customized analysis over the short term and the long term that will compare a couple different loan options side by side, so you can decide what's best for your family financially, for the future. And then I'll call you and set up a time so we can go over that together and make sure that you don't have any questions or concerns about the numbers and that you're completely clear on what we're offering you. And so that basically just sets up them knowing, hey, I'm customizing this for your situation, and then I'm going to follow up with you and go over it with you and make sure you call them and follow up. Do what you say you're going to do.
I love it. So guys, I want to just remind everybody, give you a minute on what is the difference between a white belt mortgage experience and a black belt. This is white belt. This is delivering a fee worksheet It's showing rate, payment, closing cost, the transactional triangle. This is where you start to build things out. You go, first of all, to an orange belt where you've done over 20 TCAs and you're showing cost over time. That is an orange belt level of mortgage coach. Blue belt is you've done 50 or more TCAs and you also know how to do the prepay strategies. So that is the advice star. And I'm not saying like you could do this in your second TCA, but at Mortgage Coach, that's where we make you a blue belt. Purple belt is when you know when and how to add a video, when and how to add audio. The live feature is what Jordan just talked about, when and how to do that. You're always thinking omni-channel, which is give people what they want, where they want it, how they want it. Some people want it printed out, know how to print out a TCA. Some people want a link for their iPhone, know how to have that mobile conversation, know how to have the desktop, and always deliver options. If you've done that 75 times, you are a purple belt. Brown belt, from our perspective, one, it's 100 plus TCAs, but most importantly, it's like you're an inspirational leader. So Jordan, you are an inspirational leader. You've delivered value to the mortgage coach community. And then black belt's pretty straightforward. You've done it 300 plus times and you know how to do it in every selling situation that you get into, whether it's a rate and term refi, whether it's a rent versus own, whether it's an MI analysis, FHA versus conventional. You know how to use Mortgage Coach in every selling situation you get into. So guys, I hope this has been a valuable call. Please give it a like, share it with your mortgage friends. If you have questions for me or Jordan, put them down below. And Jordan, dude, appreciate you taking time for the Mortgage Coach community, man.
Thanks, Dave. Appreciate it. It's been a lot of fun.
All right. Hope to see you in Nashville in a couple of days.
Sounds
Take care.
good.